Welcome traders, and in this video we're going to be talking about 5 important trading rules. Okay, so we're going to be talking about 5 trading rules that can improve your trading. Now, number 1 is being able to build a business trading plan that works for you. Now, this comes with time and chart experience and actually trading experience and actually managing money. When it comes to managing a live account, obviously you want to be able to build this plan which you can trust and is a solid foundation to your basic trading operations. And you want to be doing this by improving how you're actually trading. Now, for example, you might want to actually create a trading profile, a trading view profile, where you actually save all your work, document all your trades, or you put them into folders where you can then go back at a later time and look at what went wrong and what went right. So obviously you want to replicate what obviously goes right and repeat what works. So if we look here at GBP USD from a few days ago, I did in fact analyze this pair where I was anticipating a minor pullback and then obviously a movement into new highs 1.4300. So if we have a look at GBP USD now, we did in fact get a pullback. We did in fact pull back all the way down to actually create a new low in this case here. So a little bit of manipulation there, so obviously I can add this to the journal and add it for future reference as to what to look for when it comes to trading GBP USD and what it's done before. But we have in fact pulled up now, and we are still looking to make a new high up at 1.4300. Obviously by backtesting and reviewing your trades, seeing what works and see what doesn't, you can then obviously go on to build the plan and then actually treat trading like a business in order to make it profitable and make it work for you. So that brings me on to point number 2. Point number 2 is being able to protect your capital and keep the risk low. And we see many times traders come to us and they might start off risking some decent amounts on relatively good setups, but then obviously the risk tends to slip. Now that's the most important part of trading, is being able to manage your risk and keep the risk down and low on your trading account. So obviously we do like to encourage traders to use around the 1% risk mark. Anything lower is great. Obviously our low risk packages allow up to 1.5%, and then the more aggressive packages allow you to trade up to whatever percent you like. Obviously if you do create that buffer for yourself, then you are able to trade the 2 or 3 or 4% for your account. We do recommend keeping the trades the risk on the trades very low though, and also a lot of traders increase the amount of risk that they're putting on the account by entering many positions. So obviously if you were to have found a short, let's say in this here, so this lower swing high, you were able to actually find and identify this short setup, and obviously you might apply down one entry there at 1%. If the trade was then to fall into a lot of profit, we've noticed that some traders actually tend to extend their risk, or they over leverage that certain scenario. They'll put on another 1%. Market will come back up to the break-even point. Obviously they're now at a loss because of the second entry. You know, we're not saying that multiple entries are bad. Obviously they can be good when they're utilized in certain situations, and you can you know, leverage certain positions off other positions in order to make more money. But generally risking a small percentage over one trading setup and keep the amount of trades that you're actually placing relatively small is actually going to increase your likelihood of actually being able to be a profitable trader long term. So point number 3 is being able to always learn and adapt. A lot of traders might get a little bit too caught up on a really great track record, for example, over many weeks or months, where they've not been able to lose a trade or not been able to lose many trades, and then they think that they got the market figured out and they know exactly what's happening in every certain trading scenario. You always want to be making sure that you're keeping a fresh journal, keeping a fresh log of all of the things that you're learning throughout the market. It might be perhaps using your Fibonacci in a different way on the 4-hour or on a lower time frame, the way that you're looking for entry setups, or maybe even where you're actually placing stop losses. Always learn and adapt and be creative with actually how you develop your trading plan and make changes to the way that you're actually trading long term, because that's actually going to be a huge point on your longevity in the Forex market and how much money you're going to be able to extract out of this game. So that brings me down to point number 4, which is super important, and it's knowing when to trade and when not to trade. You'll obviously pick this up as you go as a trader and as you actually gain more experience in the market, but we tend to encourage traders to actually trade up to around 2 to 3 hours per day. Obviously, if you're spending more time on the charts, and you're going to start seeing things there, you're going to your judgment on a certain bias or a certain currency pair is going to get clouded. It's going to be very difficult to actually find the different trading setups and be able to actually manage your trades effectively. So we like to say maybe up to 2 to 3 hours per day. Obviously, you're going to be studying, you're going to be back testing, and you're going to be looking for ways to improve your trading plan and keep a general swing of things on your overall trading positions and what you have open, what you're looking at, what trading scenarios are going to be coming up for your watch list. So it's important to know when to trade, and obviously when you're, for example, if you take a losing trade, close down the computer. Obviously document the trade, how it went, how you're feeling, then close down the computer and do something else. If you win a trade, then just do the same thing. You want to build a repetitive pattern for where you're actually placing these trades over and over again. The more profitable trades, obviously, we want to be getting. It's not always nice to go through losing streaks, which is bound to happen. Losing, 1, 2, 3, even 4, 5 trades in a row is bound to happen as a trader. So we don't want to beat ourselves up over them, but we also don't want to get too overconfident when we start winning trades. So it's about learning how to adapt ourselves to the times that we're trading, and making sure that we're not over trading or under trading. Revolve around your own lifestyle and your own trading plan, your own trading hours that you're actually trading for. So basically build your own trading schedule and find out the hours and the amount of time that you want to allocate onto the charts each and every day, and stick to those trading hours. So the 5th and final point in this video it's quite simple, but many traders really don't do this enough, is withdraw your profits or bank the winning trades. It's very simple to obviously say withdraw your profits, because profits are very difficult to make in this Forex market, but many traders actually want to multiply their capital over and over again. They want to keep on letting it accumulate and build up, and they think that obviously we've all been there, where we've created these Excel spreadsheets where we've put in random numbers and we've put in the compound amount over time, where if you make 5% a month over 100 months without taking any profits out of the account, then obviously you're going to see crazy huge figures, which is pretty unrealistic. If you want to make it sustainable so that we can actually come back to trading the next day, we want to be keeping hours low, and we want to be making sure that we are keeping money coming out of the market, and we actually can see this money that we're actually working for. So the 5th and final point is withdraw your profits and make trading sustainable for you. So that's it for these 5 tips on your trading rules. Be sure to stay tuned for more blogs to come, and trade safe.